Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Palantir Technologies, ticker symbol PLTR. And so I just wanted to do a follow-up from last week's video, which came out on Monday, which was a holiday, so following the last trading day of January 12th, which was this little green inverted hammer candle here. And I suggested that there was a possibility of breaking out of this falling wedge. And then over the course of last week, it does look like we kind of hugged the upper side of that wedge before kind of getting a fake out on January 18th, but then bouncing, confirming the breakout the following day, January 19th, which was last Friday, forming this bullish hammer candle, getting a higher close than the previous day's open. And then on today, January 22nd, Monday, we gapped up to form this inverted hammer candle, which is not necessarily the best thing, but it is great that we did gap up. Saw a lot of bullish action. It was actually up nearly, or actually over 9% on the day at the highs of $18.35. But then it pulled back, closing at $17.60, being up almost 5% on the day and dipping a little bit in the after hours. And yeah, so I think that this is just a beautiful chart with the formation of this falling wedge, what appeared to be a fake out, but then retest of the top of the wedge, confirming it, and then gapping up and actually going over this gap that was formed between December 29th and January 2nd. And so that gap is at $17.10. And so now there's actually a gap, like kind of a double gap, now going down to the downside of, let's see, last Friday's close, which was, let's see, $16.78, or the high on, which was actually the high on the day. So there is a gap to the downside, and it does look like, it was rejected from $18, this yellow line. So that does seem like it was a pretty significant level. Also, we do see with the volume profile, there's a lot of consolidation in that range between about $17, or this orange line that I've marked at $17.21, based on the low on November 2nd. And yeah, so between this orange and yellow line, we do see all of this consolidation. So it's not really that surprising that there was a rejection here. And so what I could see is a pullback and a resettle around $17 before making another attempt to break above and close above $18. Also, I do want to throw up the two moving averages. The 21-day, that is the peach-colored line here, and that is at $16.86. So that might suggest that a gap fill could be happening in the near future. So filling that gap to the downside with the 21-day moving average acting as support. Also note the yellow line here, the 50-day moving average at $18.09. It does look like that acted as resistance. And so I do think that $18 is going to be a pretty key level to be breaking above. And then as far as the RSI goes, that is right around 55, 56. And so that does seem like it is getting into the upper half of that range between 30 and 70, but still it's not overheated. The stock is not overbought, so there could definitely be more upside. But I do think that settling around 17 would be good for it. However, if we notice below 17, there is less consolidation there, less of a volume profile. So it is quite possible that if it does retrace more, it could be filling this gap to the downside right around $16.80. And also, I do want to throw up another Fibonacci retracement. I did one last week, I believe, going from the low here to the high here. But this time, I'm actually going to do it from the high here and retrace down to the recent low, because it does look like that was a bottom. And there are a couple levels that do stand out to me. One, the 236 is right around $17, or $17.14. coinciding with not only this blue line, the gap fill there, but also this orange line at $17.21. So I do think that could definitely be serving as support if we do get a pullback. However, like I mentioned, with less volume below it, it does get a little precarious there. Also, another level, Fibonacci level, is the 382, which is at $18.05, so coinciding with this yellow line at $18. Again, another significant level that will be key to break above and hold. And once we do get closes or a close above $18, $18.05, or maybe at the top of this volume shelf, which looks like it's around $18.16. If we can get a close above that, the next level that we would be looking to close above and hold would be the 50% retracement at a price of $18.78. So those are just some prices to be keeping in mind looking forward before earnings in a couple weeks on February 5th. So it will be interesting to see where the RSI is before then. If it is overbought, quite possible we'll be seeing a pullback around earnings, contrary to what we saw in the last earnings when we saw this big gap up. We might see kind of the inverse of that if price is trading up here in these levels. I wouldn't be surprised if we saw a pullback perhaps to $18 at that point. So something to keep in mind, but I will be doing another video next week. So make sure you like this one if you found it helpful, share your thoughts in the comments down below, and subscribe to the channel for more coverage like this. Thanks a lot for watching. Happy trading.